What's up everybody, welcome back to my channel, Earn It, Save It, Invest It. And in this video, I'm going to be breaking down Amazon versus Walmart. Now I'm sure you have at least bought from one of those, right? You've bought from Amazon, I'm sure, or from Walmart, if not from both. So I think this is a very good comparison. They are top 2 or top 3 of the retail giants, right? I'm sure there's like a Target out there, right? You're thinking of maybe when you buy stuff, a store or online, but really Amazon and Walmart are everywhere. So we're going to break down which stock is going to be better invested into, but also which business is better. We're going to kind of break down the numbers, their revenues, who's growing more, and then we're also going to be breaking down the stock chart to see who has been better in the last 5, 10, 15 years, and then what can we expect moving forward. And there is a couple surprises that I was shocked at looking at the stock chart. So we're going to break it down really quick, and then we'll see which one kind of wins out the battle. So let's go. All right, so we got Amazon versus Walmart. Now Amazon AMZN versus Walmart WMT. Amazon is worth, the market cap is $2.27 trillion. And that's obviously a lot more than Walmart's $777 billion. It's about around 3 times as much as Walmart, right? Amazon is worth 3 times as much as Walmart in terms of market cap. Now, by the time you watch this, I'm sure that the prices have changed a little bit, but as currently right now, the stock price is $216 for Amazon and $97 for Walmart. Obviously they've gone up and down a little bit. The 52-week high was $242 and the 52-week low was $151 for Amazon. So it had a pretty good range, but we did kind of go through a correction. Walmart is high as $105, low $65. So, we're going to see some of that fluctuation here in the last year. But the total return, and this is one thing I was actually shocked on. This is the one that shocked me. The 1 month return, Amazon completely outbeats Walmart, but we're kind of coming back from this big heavy correction from the tariffs and everything. So I'm not surprised that things are just in the last 1 month, maybe even 3 months, have a good return. But it's slightly inflated because of that. But at the same time, it is what it is, right? So Amazon is 12%, Walmart's 0.75%. But as we move down the list, they get closer and closer to each other, right? The 3-month return is about 9% for Amazon, about 7% for Walmart. 6-month return, negative 4% for Amazon, 4.6% for Walmart. 9-month return, 24% for Amazon, 27% for Walmart. And then the year-to-date return, which has been, 6 months? So we've already did the 6 months. I don't know why it says 6-month return and the year-to-date return is so different, because it's literally June 9th. Year-to-date return, negative 10%, and then Walmart's 8%. And the 1-year return for Amazon is 17%, and Walmart is 49%. The 3-year Amazon is still losing 86 to 151. 5-year return, only 66% to 158 in the last 5 years. So Walmart has completely blown Amazon out of the water. If in the last 5 years, if you invested into Walmart June 2020, during COVID, which is kind of shocking to even think about, you would have made a lot more money in Walmart than you would have in Amazon, right? You would think that more people would have gone more digitally and more online, right? It doesn't mean that Amazon's business isn't growing any less, but this is the stock price. So, but then of course you go into the longer 10-year return, and now Amazon is at 900%, where Walmart's only at just under 400%. So, as we kind of stretch out the history, Amazon does exponentially outgain Walmart. But over the last 5 years, Walmart has been a better investment than Amazon. That was shocking to me to see. And we will actually confirm that by looking at the charts. I'll show you how it breaks down. Dividends, Walmart does pay a dividend. It's a very low paying dividend. It's less than 1%. Amazon doesn't pay dividends, so there's really no comparison. The valuation, I really look at the PE ratio forward and the trailing 12 months. And I look at the GAAP, which is the GAAP, generally accepted accounting principles. So this is just basically gonna have all the stuff you need. The non-GAAP is when you have these big one-off items and stuff that's really not happening a part of the business, right? So sometimes it doesn't really even play too much of a difference, and you can see in these there's not much of a difference, but generally people will, and it's better to value a company based on the generally accepted accounting principles rather than the non-GAAP. So I'm looking at the PE GAAP forward and trailing 12 months, and Amazon is at 34 and Walmart is at 37 and 41, right? So forward looking, obviously I want to look at forward more because this is the stock market. And right now it's saying Amazon is actually undervalued, or just it's you're paying more for Walmart right now, right? You're going to be paying more for Walmart in the sense of like how much it's actually earning compared to how much the stock price is. And this is also very interesting because when you look at the growth, Amazon completely beats Walmart, just blows it out of the water in terms of their actual business growing. The revenue growth is 10% year over year. Walmart's only 4%. Right? Forward-looking revenue growth is looking at almost just 10% again for Amazon and 4.5% for Walmart. 3-year compounding annually growth rate is 10%, just under 11 for Amazon and just under 6 for Walmart. Now let's look at net income, right? The net income is the 3-year CAGR is 45% for Amazon and only 13% for Walmart, right? If we just look at their profitability, the gross profit margin is 49% compared to Walmart's 25%. Their net income margin, which to me is one of the biggest things you want to look at, the net income margin and just the net income, and their net income margin is 10% compared to Walmart's 2.75%. And here we go, the revenue. And here's what's interesting, right? Amazon has less revenue than Walmart, but their income, their net income is so much more, right? About 10%, right? So if you have the $650 billion in revenue and you have 10% of net income, with net income is like your profits, like how much you're actually profiting and you're distributing to the shareholders. You have almost $66 billion in profits, net income, compared to Walmart's, because the percentage was so different, right? Amazon's net income, their margin was so much higher, and even though they make about the same, actually Amazon makes less revenue, they are making a lot more for their shareholders. So you look at all this, just all of this of it, it's just net income available to the common shareholders. Again, it's the 66 billion compared to their 19 billion. So to me, it feels like, well, Amazon's making more money, they're growing faster, right? They're profiting more. Everything is just seemingly like they have a better company, right? Everything's going more for them, but yet you're actually paying more for Walmart. It's pretty interesting. If we look at their balance sheet, right? How much cash do they have? What do they owe, right? What are their debts and stuff? What are their assets? Their total cash, Amazon has $94 billion. They almost have $100 billion in cash. Walmart has $9 billion. Total debt, okay, Amazon has $157 billion and Walmart has $68 billion, right? So their net debt is $63 billion compared to Walmart's $59 billion, right? So they're about the same in total debt, but Amazon would have a way higher chance of being able to pay back debt, right? Pay back more and find a way of leveraging ways to paying it back, where Walmart's a lot more strapped. And then the free cash flow, we could just look at net operating cash flow is about $114 billion to Walmart's $37 billion. So again, Amazon is just kind of blowing them out of the water. So I wanted to look at, okay, how do they make money, right? How does each company make their revenue, and which one is going to be better for the future? So I'm going to start with Walmart because that's the one that seemingly was, you're paying more for it, right? In the last 5 years, it's been a better investment. So will it continue to be in the next 5 years? Let's look at how they exactly make money. So I just, quickly searched Google, because I could break down all kinds of ways and really get into the business, but this is going to quickly break down exactly how they're making their money. And it's the retail sales, which all of you know. You can shop online, obviously, too, but they're their stores, their membership programs. So they have, like if you're part of Walmart Plus and all that stuff, and they do the free shipping. Financial services, they do money transfers, bill pay, credit cards, stuff like that. Advertising, their retail media network allows brands to advertise on their digital stuff, so they, other companies can advertise on Walmart to try to make sales. They have their own private label brands, so they sell their own, they buy, but it's similar to Amazon too, right? You buy out companies and brands, and then you just sell them yourself now. And then they have their international sales. Okay, that seems like a store, right? A store that offers certain things extra, right, with the credit cards and advertising, but really it's a retail store, right? They don't have a lot more to it. Amazon has its online store, right? Its app, as everyone knows. Third-party sellers, so all the people that sell through the warehouses and all these other companies that sell through Amazon. Amazon Web Services, and I don't think people really have still yet figured out AWS. It is everywhere, right? It's powering so much behind the scenes that you don't know it because it's behind the scenes, right? People don't know the names of the cameramen. You know the names of the actors. So AWS is the camera. It's the camera, the cameraman. It's doing so much behind the scenes, but you're seeing the face. You're seeing the Amazon products, right? You're seeing Whole Foods, right? Because that's one of the things it says at the bottom, other businesses, right? They have bought Whole Foods. They've bought other businesses, right? They're even starting their own retail where it's like card free. You walk in with your phone. You might have to load your card in once, but then it just knows where you are. You grab and go. You don't have to pay. Like, there's no checkout. You just grab and walk out. But so, AWS is behind the scenes and really no one's seeing it, and it generates so much money. So much money. In fact, I'll look that up right after this. But also Amazon does subscription services, like Prime Video, their music, Audible, just for all their shipping, and then their digital advertising. Obviously, a lot of people advertise on Amazon as well. But let's actually look up really quick. How much does AWS make in revenue per year? In 2024, AWS generated $107 billion in revenue, and it represents a 19% year-over-year increase. The operating income was $40 billion. AWS is generating $107 billion in revenue. That's more than 15% of Walmart's total, revenue. So it does a lot. It does a lot. If I was looking at it, just looking at all these things, looking at the actual numbers in the company, I would go for Amazon personally, not Walmart. Even though it's been a better investment over the last 5 years to go with Walmart. You can see the ratings over here. And this is why it's always hard to even trust them. When you look at Amazon, it looks consistent, strong buy, and strong buy, right? And these are different ratings, right? From Wall Street Analyst, Seeking Alpha, which is, the subscription I have, and they have all the, all the analytics and stuff, and then Quant Rating. But it's just all these different rating systems, right? Amazon is pretty consistent, strong buy, strong buy. Walmart is hold, sell, strong buy. This is why, even if you're listening to me on this, whatever, you want to just do your own research. You want to do your own research. You don't want to just listen to someone. You look at these quant factor grades. Again, I don't know exactly what the quant is. I do my own research and I look into the numbers myself before I really start caring what they're grading it exactly. And the valuation, Amazon is a D. I don't believe that at all. And their growth and profitabilities are A's. The valuation is not even a D, but whatever, this is what they're rating it, right? Walmart is an F valuation, but this profitability is an A plus. And so if you just went based on this, I guess valuation, you're saying, yeah, Amazon's a D and Walmart's an F. And like I said, you do pay a little bit more for Walmart. And if you're paying more for Walmart and the business makes a lot less in terms of profits, well then, why am I paying more? Let's go into the seasonality. This is how often they are profitable in a month, right? So throughout the years, right, over the last 10 years, every month from January to December, it's going to show you what percentage it went up. And it just shows you when it's the best, right? So this is Amazon first. In January, it has a 72.7. I don't know why those are having the odd. Maybe it's because we were finishing that month for this year. But for January, it's 72, February 45, March 72, April 72, May 63. I don't need to actually break it all down. But as you can see, September is actually Amazon's worst month at only 20%. And only the last 10 years, it's only gained in stock price 2 times in the last 10 years. 2016 and 2024. Every single time, even in 2018, it was negative 0.5, and in 2015, negative 0.2. But it was still negative. So September is a really hard time for Amazon stock. February, seemingly also, right? August, December has kind of the rough end part, but then November has a great November, right? So, I mean, it's probably, maybe it has a great November, so it struggles in December. That's just what happens. You can look at 2022, it just had a bad year. But those are what, those are the numbers, the seasonality for Amazon at its current time right now, or in June 2025. So you can see, if we're buying in June right now and into July, right now it'd be a really good time to buy. In the last 10 years, it's, 7 out of the 10 years, it's had gains, in the last, for the next 2 months, June and July. And then you kind of get into a rough patch with August and September. Doesn't mean to sell, maybe it just means to buy more during those months. Walmart, I'm not going to again break down each and every single month, but as you can see, its worst month is February at 36%, January at 54%, also in May 54%, June has a 50%, so there's a lot of low. December is 40%. So it seems like for some reason that it has a lot. I don't even see an 80% on here. I see 2 70%. Similar to Amazon, but Amazon definitely had more months with higher gains, more consistent higher, and it's weird because, right, Walmart has actually outperformed Amazon in the last 5 years. So let's actually show. Okay, so here's the Amazon and Walmart chart. Now, if I just click 5 years, here's what it looks like. In the last 5 years, Amazon has gained 72% to Walmart's 145%. That's pretty crazy to think about. Now, if I go back a little bit more, just a little bit more right here, now we're like almost even, right before COVID. Right before COVID happened, right? Amazon went on this big run right after COVID, and then it also had a huge drop in 2022. And so, but when you look at since July 2020, Walmart has outperformed it. This is not the stock price, obviously, this is percentage-wise. Now, if we go back even more, let's go back, what is this going to be? Almost 10 years. Okay, now Amazon is, really outperforming it. Let's go back even more. And then now we're going back, let's go back almost 15 years, a little bit more. Now look at the difference. Amazon is at almost 5,000%. Walmart is not even at 500%. So, and of course you could say, yeah, Amazon has been growing so much over the last 10, 15 years. The app, everything about Amazon has exploded. Well, what makes you think it's not going to continue to explode just as much, if not more? You know, people are shopping more, people are going more digital. They're able to deliver everything to us. They're part of our ecosystem in terms of the internet and behind the scenes. They run so much of the show. They're in live sports now. I'm a sports editor and I'm thinking about starting to move over there. I work for Fox Sports. And it's like, you know, I'm thinking about also starting to work at Amazon Sports. And they do so much. And they have so much money behind them. They have such an ecosystem. They have such a moat that it's hard to, you know, it's hard to break. So, in my opinion, I do believe Amazon is the better company to invest in, especially over the next 10 to 15, 20 years. Walmart, I don't know exactly where it's going to go with, you know, its retail stores and stuff. I do believe retail is, you know, just the physical stores it's never going to fade out completely. People want to go and, you know, experience it and touch things and actually physically be there and have an experience. But at the same time, Amazon has capitalized so much off the internet, off the online shopping experience, and then adding themselves into the technology behind all of that and the way we do things and the AI and everything that they come up with. It's great. And they're getting into the health industry, right? Delivering medicines and all that stuff. So it's just, Amazon to me just has more plays and has better value to it, makes more money, and you're paying less. You're paying less per stock, essentially, right? For how much money it's making to how much the stock is than Walmart. You're paying less. So, yeah, that was kind of a longer of a video than I anticipated, but I hope you got a lot out of it. I know a lot of people shop at Amazon and Walmart, so I figured, hey, why not break these two down? I could break down the real nitty gritty of the numbers and really break down the businesses, but that would be another 20 minutes or so. And I'm not sure if, that would just be for another video. So anyway, thank you for watching. Please give a like and subscribe. That's all I ask. And thank you very much for watching. And don't forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.